Good morning. I trust we're all doing well. So, welcome to the first class of this boot camp meeting. And what we're basically going to be talking about is going to be the introduction to trading. This is our first concept. So, what we're going to cover is what is trading all about? What are the time frames we trade? What are things we trade? And also a little bit of market or trading psychology. So let's get straight into business. Our outline is simply like I've stated before: what is trading, what do we trade, what are the markets, market session and timing, trading psychology, and also possibly a question and answer session. Alright, so basically it's more or less like a teaching, because when we ask what is trading, a layman foundation for trading is the buying and selling of financial instruments with the aim of making profit from price changes. So when we buy or when we sell financial instruments, our major aim is to actually make profit when the price changes, either when we buy or when we sell. Now, when we say markets and financial instruments, what we mean by financial instruments is currencies, commodity, indices, stock, cryptocurrency, etc. You understand? So, but at its core, like I stated here, trading is just basically speculation. You're trying to, I don't like using the word predict, but the prediction is actually based on information and data that we have. That's why I said you're predicting the price of something will either go up or go down, and you take a position based on that belief, backed up by data and a rigid trading plan. We're going to get back to that, get into that in a sec. Now, what are the key concepts I've mentioned here? I've talked about buy and I've talked about sell. So we, even if we don't want to mention, say, buy, we actually use long. So this is when you profit when the market goes up. And when we say sell, if we don't want to use sell, we say short. So when you hear things, I'm going short on the market, probably Euro USD, that means I'm selling on Euro USD. Understand? So that's one thing you should know. Now, what's the purpose of trading? It's to generate consistent profit over time, to gain financial freedom or extra income, and to grow a skill for a small capital. Now, there's a big difference between trading and investment, and I think I'm going to give that as an assignment at the end of this video. So the next one, what do we trade? What are things we trade? So in trading, especially CFD trading, which is what we do, like majority of traders worldwide are actually CFD traders and not forex traders. So when I tell people that I'm a trader, I don't tell them forex trader, I tell them I'm a CFD trader, because a CFD trader is actually someone that trades contracts for difference. A forex trader is actually someone that actually has an asset at hand. You understand? So most people are actually CFD traders and not forex traders. So we speculate on the price movement of various financial markets without actually owning the actual assets. So what are common markets we trade? We trade foreign exchange markets. That's with respect to currencies. So Euro USD, GBP USD, USD JPY, USD CAD, Euro JPY, JBP, NZD, etc. Because that's one of the most liquid markets in the whole world. You understand? So the second market we can trade is actually the indices, because this represents a group of stocks. So when you combine stocks together to form a family, we call that indices. So an example is US 30, that's from the United States. That this comprises of 30 majorly moving markets, components rather. We have NASDAQ 100. This comprises of 100 tech components in the US. We have S&P 500. We have BRICS. We have tons and tons of them. You understand? So, and this is not only limited to the United States. We have indices from Germany. We have indices from the UK. I think we have UK 30. We have UK 100. You understand? So indices are also nice markets to trade because they have high volatility also. So the next one is commodity. So these are physical goods that we trade. So example, you have gold, you have silver, you have oil, we have tin, we have aluminium, platinum, tons and tons of this. So these are just traded based on demand and supply, and they are heavily tied to global events. So like if you monitor the market well and you see a market like gold has a way of having volatility. When I mean volatility, having movement more when global crisis occur, like when you see what's happening in the Middle East, crisis in the Middle East, when it begins to intensify, it has a way of affecting how gold tends to behave. So we have cryptocurrency, which I'm sure we're all fans of: BTC, Ethereum, Ripple, Solana, etc. So it also have high volatility and also a 24 hours trading session. Then the last one, we have stocks. So these are just from company shares, just like Tesla, Apple, etc. So like I've stated, we profit when we buy low and sell high, or we sell high and we buy low. So, but the major advantage of CFD trading is that we can make profit from both rising market and falling market. So why do we trade all these markets we've considered now? Because they have high liquidity, high volatility, they have a clear path, they have clear patterns, they are very sensitive to news, they are available leverages, and they are very suitable for both beginner traders and professional traders. So what are trading sessions and timing? You understand? That's what we're going to talk about now. So one thing you should notice is that majorly, I as a trader, I focus on CFD market and foreign market, you understand, foreign exchange market. And one thing you should know that it operates 24 hours for 5 days, not 7 days. A week, yes. But the market is not equally active throughout. That's one thing you should note. So that is why we have 4 major trading sessions based on time zone. You are aware the shape of the earth. Let's do a bit of physics now. The earth is not flat, it's actually an elliptical spheroid, you understand? So, and because of such shape, everywhere on the earth doesn't have the same time frame. So you can be in Nigeria, you'll be in the afternoon, you'll be in China, and someone over there will be in the night. So because of such differences, we majorly split the market into market sessions. So the 4 major sessions we have are the Sydney session, Tokyo/Asian session, the London session, and the New York session. So I actually encourage you guys to get a note so you take down all these things, because this will be part of the quiz I'm going to ask, because we're going to do quiz and take exams. So these are the 4 major sessions we have: Sydney session, Tokyo session/Asian session, London session, the New York session. You get? So one thing you should note that each of these comes with their varying volatility. You get? So, but the most active is actually the New York session, because the US dollar is actually majorly dominating such session. So, and it comes in with some form of economic news. So in varying strength, well, which is stronger to which is weakest, we're going to say New York is the strongest, followed by the London session, followed by the Asian or the Tokyo session, then lastly the Sydney session. And one thing for you to note is, do not try to capitalize on all the trading session, because there is volatility in all of them. New York is more doesn't mean Sydney doesn't have. Sydney has, but instead look for the time frame that suits your lifestyle, then master that time frame. Because once you become a master of one, it will be better than one that is master of none. So look for your time frame, stick to that time frame, master that time frame. It will help your psychology. Then the next one, psychology, which we're going to jump into. I'll just give a tidbit of it. So one thing you should note is that trading success isn't just about strategy, that your mindset plays an active role. So that even if you have a great system, a good system, a wonderful system used by the best trader in the world, if your psychology is not in check, everything is worthless. So trading psychology is the emotional and mental state that influences a trader's decision. In trading, you will win money, that's you gain money, and you will lose money. Now, when you gain money, how is your psychology as? When you lose money, how is your psychology like? So that is one thing for you to note, you understand? So a strong trading psychology is what keeps you consistent and stable, especially during tough market condition. The going is going to be tough. That's one thing you should note. And by noting that, you should know that when the going gets tough, do you still stick to your plans? Do you still do what you ought to do, whether it comes out good or bad? That's what actually determines a good, consistent, profitable trader. Now, but that's not the only thing. There are certain factors that also determine them. Discipline. You have to stick to your trading plan. You don't chase trade. You accept that not every trade will be a winner. You're going to win sometimes, you're going to lose sometimes. But the main thing is that make sure your win out majors your losses. You get? So patience is another thing. You have to wait for high profitability setup and avoid the fear of missing out. Emotional control is also very, very needed. Don't let greed, fear, or anything take over you. And take losses gracefully. They are part of the game. It's normal. So, and also avoid revenge trading. So confidence, like I stated in the slide, I said confidence, not arrogance. So trust your analysis, but be open to being wrong, because one thing that I see that most traders tends to not accept, both beginner and sometimes even professional traders, is the ability to be wrong. Now, when you have the ability, when you know that, okay, there's a tendency I can be wrong, you accept the losses. Now, most traders feel that they have a setup, and that setup will always play out 100% of the time. That is a blatant lie. That means you're trying to say you're the god of the market, you can't make any mistake, and that's a lie. So when you make mistake, or when you're wrong, you accept that you're wrong gracefully, so as to avoid revenge trading, and let experience shape your conviction. This is as you go in the market, as you advance in the market, your experience begins to shape how you tend to see the market. And the major one of them all is risk management. Focus on preserving capital, not making quick money, because that's the mindset most traders have when they come into the market. They want to make sharp money, but that's not how the market is. So your major aim is to preserve your capital, and not to look for wins to make strong, sharp money, quick money. You understand? You're looking for means to make quick money. I will encourage you to go do either Yahoo or Sporty Bet or any other. Not here. In trading, you're going to make money, but you're going to pay the sacrifice. You understand? So one of the sacrifices, you are going to condition yourself to become a person well grounded by rules and well disciplined, a person that has patience, a person that has emotional control, a person that is confident and not arrogant, and a person that has a risk management mindset. So, and also think in terms of probability and not guarantees. I'm sure we did probability in our secondary school, and we said probability is not certainty, because when you're trading and you deal with certainty, that's the beginning of your downfall. You get, that is the beginning of your downfall. You think in probabilities, not certainties or not guarantees. You get. So I think this is the end of today's class, of the week 1 class. So with all this, a recap would be on we started out with what is trading. We went down to what we trade and what are the markets we trade. We talked about market session and timing. We talked about trading psychology, and that's all. So thank you very, very much for your time. I would actually give out some assignment which would be passed down to the group chat in the nearest future. All right. Thank you very much for your time.